Okay, well, it's a couple of minutes past 11, so I think we better get underway. So, hello, welcome to Pension Awareness Week, and welcome to this beginner's guide to the LGPS. Can people just use the react function to give me a thumbs up just to confirm you can hear me and see my screen? That's wonderful. Thank you for that. Everyone's in now. So, yes, welcome to the local government pension scheme and welcome to Pension Awareness Week. Couple of housekeeping issues just to start. As you may have noticed, we are running this with microphones muted and cameras off, but that doesn't mean that you can't get in contact with us. The chat stream has been disabled just because we were finding it very difficult to keep track of everyone. But if you have any questions that you want to ask us throughout today's session, please use the Q&A. So you'll see that right at the top of your screen, little Q&A one. Any questions, pop them in there, and then one of my colleagues will be helping you today. So we've got Chloe, James, and Chris available to answer questions. Please keep in mind that anything you put in the Q&A is public and visible to absolutely everybody else who's joined us here today. So please don't put in personal information like your national insurance number or address. We wouldn't want to have that shared with everyone. But if you would like to contact us and ask us a private question about your pension, you can email us, and I'll be putting all our contact details on screen at the end of the session. The session is going to be recorded, and we will be putting that on our YouTube channel a bit later today. So if you do have to leave early or you just want to watch something back, you can do so in your own time. So let's start at the start. What are we going to cover today? We are going to cover a whole range of things. We're going to start with the basics. What's a pension? We're going to look at the key benefits of the LGPS and find out why it's such a valuable part of your benefits package. We'll look at how much it costs and how your pension is calculated. We'll look at the process for transferring in other pensions if you've got other pensions elsewhere. We'll touch on how you can buy more pension if you want to. And we'll also go, if you're trying to save money, what the 50-50 option offers you instead. We're going to touch on the death benefits because we get a lot of questions about those. And then finally, we'll end with a quick introduction to our member self-service portal, which is called Member Online. So, what's a pension? This might seem a little bit basic, but it does trip people up. At its heart, it's just a tax-efficient way for you to save for your future. So you save throughout your working life and it gives you an income to live on after you've retired. But not all pensions are exactly the same. They run in slightly different ways and they give you different options when you come to retirement. So it's really important that you understand what your pension is and how it works so that you can make sure that you don't have any surprises when you come to retirement, that you plan for the retirement that you want. Workplace pensions, such as the LGPS, both you and your employer pay into the scheme, so it's not just you who's funding your future. But the biggest difference between pensions and other tax efficient ways of saving is that with pensions, your money is safely locked away until you reach retirement age. So you can't access your pension until you are old enough to retire. So just to make sure that it's actually there when you're ready to start drawing it, because we know how things can crop up throughout your life, and it'd be very tempting if you could have access to a pot of money just to use the things to get through today and then find an empty pot when you actually need it most. So what is the LGPS? The LGPS is actually one of the largest pension schemes in the entire of the UK. We have more than 6 million members all across England and Wales. And unlike other public sector pension schemes, the LGPS is not administered by one big national company somewhere in England. It's actually administered by 86 local pension funds all over England and Wales. There is a separate LGPS that runs in Scotland and a very similar scheme that runs in Northern Ireland. So you are part of something pretty huge. Uh, Anyone who works in local government can join the LGPS as long as they're not eligible to join a different public sector pension scheme. So, for instance, in schools, teachers are not normally able to join the LGPS because they can join the teachers' pension scheme. However, office staff, teaching assistants, groundskeepers, they're all non-teaching staff, so they can't join the teachers' pension scheme. That means they can definitely join ours. You can't join unless you're under age 75, and your contract does have to be for more than 3 months. Worth also noting, if you've got multiple jobs, you are in the pension scheme on each job. So, if that's the local government pension scheme, who are Essex Pension Fund? How do we come into this? We are one of those 86 local pension funds, and we administer the LGPS in Essex. We're actually a pretty big fund. We're the eighth largest, as we have more than 180,000 scheme members. So some of those will be pensioners, some people are actively contributing to the scheme, and some are what we call deferred. So they have pension benefits with us, but they're not currently paying in, but not yet drawing them either. We actually have more than 760 employers contributing to the fund. So from Essex County Council right down to all the little town and parish councils, but also non-teaching staff in schools and academies, housing associations, and non-profits. Our office is actually based at County Hall in Chelmsford. It's about 70 of us in the office. We have our own pensioner payroll. So when you retire and you start receiving your pension, that's us. We start paying that to you. We also look after the police and firefighter uniform pension schemes in Essex, so we are a busy bunch. So let's look at the key benefits of the LGPS. Now, the first one's a biggie. We are a defined benefit pension scheme. So you don't often see defined benefit pension schemes that often, so not everyone's that familiar with how they work. You do mostly find them in the public sector these days. So the brilliant thing about defined benefit pension schemes is that they are very safe, very secure, and the value of your pension is not linked to how much you and your employer pay in, and it's not linked to any investments or stocks and shares. So if you see any volatility in the stock markets, that doesn't impact on the value of your pension at all. So takes a lot of the stress away. I will talk about exactly how your pension is calculated a little bit later, but basically it's a set formula that's used to calculate your pension, and it's based on how much you are paid and how long you are in the pension scheme. The LGPS gives you a guaranteed pension, which is payable for life, no matter how long that is. So if you retire in your 60s and you make it to triple figures, phenomenal. We will still be paying that pension to you. There is no point where we're like, no, you've had your money now. It will keep paying out to you. And not just that, it's an index linked pension. So that just means that every year we add a cost of living increase to your pension benefits so that they keep up with the rate of inflation. We are index linked to the Consumer Price Index, or CPI, and that means that the increase is applied every April, and it's usually the CPI figure from the previous September. So obviously we'll have to see what inflation has done this year to get an idea of what it's likely to be for next year's increase. You have the option to take tax-free cash when you retire. So you are building up an annual pension with us, but you're free to exchange part of your pension in order to take a tax-free lump sum. This is just part of the flexible way that you can use your pension. So you make sure that your retirement's working the way you want it to. Some people like to take a tax-free lump sum, sometimes to pay off that last little bit of mortgage, or just to take a round the world trip, whilst you celebrate your retirement. Other people prefer to have that larger pension payable for the rest of their life. It's entirely down to you, and we do send you all the information you need on that when you actually reach retirement age. Speaking of which, you are free to retire whenever you'd like between the ages of 55 and 75. So whatever works for you is fine with us. Now, you'll see the little asterisk there. The UK government gets to decide things like how old you need to be in order to take your pension. And they have announced that they are going to be changing that from 55 to 57, and that's going to come in from April 2028. So something to keep in mind if you are approaching your mid-50s and you were thinking of retiring a bit early, it might have to put that off for another couple of years. That will impact on all pension schemes in the UK, except for the very few who are exempt, and those tend to be armed forces and emergency services. One of the biggest questions we get is, when can I retire? Uh, Perfectly reasonable. It's what we're all here for. We want you guys to have the retirement you want when you want. So your normal pension age is linked to your state pension age. So that could be anywhere from 65, although there's not that many left at 65. Most people now it's 66 or 67, and then it's going back to as high as 68. So that's the point we expect you to retire and take your pension. But as we say, it's entirely up to you. You can retire earlier than that if you'd like. So at the moment, from 55, in a couple of years, it'll be 57. If you choose to retire early, we will reduce your pension for early retirement. So there are early retirement reductions applicable, just because we're going to be paying that pension out over a longer period. So we're going to apply those reductions. On the other hand, if you get to your state pension age and you think, no, what? No, I'm fine. I'm great. In fact, I want to keep going. I'm not stopping. That's fine. You can carry on paying into the scheme and the pension will keep increasing. So as long as you are paying in, your pension will build up. I know some people think, oh, I'm going to hit a ceiling at some point. Nope. As long as you're paying in, your pension will carry on growing. We do have to pay your pension to you by your 75th birthday. So should you still be a very dedicated employee and you're still working and your 75th birthday is on the horizon, your payroll team will take you out of the pension scheme about 2 days before, just so we can pay the pension to you, because we want you to get the benefit of paying into the scheme. So we want you to be able to take your pension and your tax-free cash. Quick note for ill health retirement, which we will touch on in a second, that doesn't have a minimum age. That's the only way of retiring where there is no minimum age limit. Simple rule for that is anyone can get sick, anyone can become injured and find themselves unable to work. There is no point at which, no specific age where that suddenly becomes more likely. So it can happen to anyone. So there is no minimum age on that one. So I say you can choose to retire and take your pension. There are a couple of extra types of pension that you might be interested in. So there is flexible retirement. So this is a way of easing your way into retirement. So you reduce your working hours or you step back to a less senior role and you have your pension brought into payment, and it kind of offsets the reduction in your salary. So it's to try and help you ease towards retirement. You start winding down, you're coming in less, you're taking on less responsibility. And the idea is that it's a less of a shock to the system when you actually fully retire because you've eased your way in. Every employer has their own policy on flexible retirement, and they'll tell you how many hours you're expected to drop. It's usually around 25%, but I say each employer is different. Obviously, it's probably a little way off for most of you, but if you're ever interested in it, your HR team will be able to give you more information about your own organisation's particular policy on that. Redundancy retirement. So if your position is made redundant and you are 55 or over, your pension has to be paid to you straight away, but we don't apply those early retirement reductions. So you get the full pension that you've been building up so the whole time you've been in the scheme. So there's no early retirement reductions. It's the full pension up to the date that you leave employment. And again, ill health retirement. So if you become ill or you are injured and you cannot work any longer, your employer will probably go through the process with you with occupational health. They'll be giving you assessments, figuring out how to keep you in work, what adjustments can be made, but they may come to a point where they think you simply can't do the job anymore. In fact, we don't think you can work at all anymore, in which case your employer can pursue ill health retirement. This means your pension can be brought into payment immediately without any early retirement reductions being applied. In fact, there are 3 tiers of ill health retirement, which are based on how severe your illness or injury is and how likely it is that you'll ever be able to recover and return to gainful employment. Tier 1 is the most severe, so we don't think you'll be able to return to gainful employment before state pension age. And in those cases, your pension isn't just paid to you in full, it's enhanced. We enhance it up to how much your pension would be if you'd been able to pay into the scheme up to your state pension age, based on your current pay and working hours. So if you're unfortunate enough to have something happen to you quite young, that enhancement can be huge. So it's really just there to give you that, that reassurance that if anything happens to you and you can't work, there is a safety net. Your pension can be paid to you. There isn't a minimum age. You do have to have been in the scheme for at least 2 years in order to have a pension with us paid out to us from us. Sorry, but it's there as reassurance that you will be looked after. You will still have an income. You will still be able to keep a roof over your heads if something happens. And lastly, we automatically include life cover with your pension benefits, which again provides a tremendous amount of reassurance to your family to know that they will be looked after if anything happens to you. Now, the life cover is automatically included. You don't have to apply for it. It doesn't cost you extra. It's already there. We're going to talk in a little bit more detail about it at the end of the session. But most of you will be aware that if you die in service, there is a tax-free lump sum, which is calculated as 3 times your annual pensionable pay. And you can nominate anyone to receive that lump sum. And we're going to go into about the form and how you can do that towards the end of the session. How much does it actually cost to be in the LGPS? Well, the contribution rate that you pay is based on how much you actually earn. And the bands are on screen now. And these are actually set at a national level. So everyone in the LGPS in England and Wales pays the same amount depending on where their salary falls in the bands. These are adjusted every April to account for inflation. Employers also contribute to the scheme. So employers actually bear about 2/3 to 3/4 of the cost of running the pension scheme. So they pay considerably more than you do. And their contribution rate is set by an independent fund actuary who looks at everything every 3 years and decides how much the employers also need to pay in. So I know it sounds a bit confusing because you're thinking, hang on a minute, so I'm paying in, my employer pays in, but that doesn't determine how much pension I get? Nope, we take your pension contributions, we take your employer's contributions and we invest them. And then we make sure that we've got enough money to pay all the pensions and all the death benefits that we've promised we will pay. We're very good at this. We are fully funded. So we're exactly where we want to be. And our current fund value is around £10.8 billion. So we have a substantial fund there to make sure that we can pay out everyone's pensions and everyone's death benefits. But how much does it actually cost? I know you see the figures on your payslip, but as I said at the start, paying into a pension is tax efficient. So let me just so what you actually pay isn't necessarily what you're going to feel coming out of your pocket at the end of the month. So in this example, annual salary of £26,000 means this person has a contribution rate of 5.8%. So their pension contributions, if they choose to pay them, is £126 a month. But because it's tax efficient, your pension contributions come off your salary before tax is deducted. So tax is actually, you're actually taxed at a lower rate because you've already had your pension contributions come off. So you can see here that this person, if they've opted out, they pay £224 a month in tax. But if they're paying into the pension contribution, they're paying £5 less. So the actual difference between what you would take home if you're in the pension scheme compared to not is actually just £101. So you've got that £25 extra just from the tax man. So it's kind of one of those things to keep in mind if you're ever thinking of opting out, that it's actually a little more affordable than you think. But how is your pension actually calculated? I know I said it's not linked to your contributions. So what do we actually use to figure out how much your pension is worth? Well, Every year, your employer tells us how much you were paid between the 1st of April and the 31st of March. So that's what's known as the pension year. So not quite the tax year. We decided to be different by a week. Um, but every year, your employer tells us how much you were actually paid and how much you were paid pension contributions on. So your basic salary, any overtime, any pensionable bonuses, or any pensionable allowances, but it doesn't include things that you don't pay pension contributions on. So things like expenses don't get included. So we take that annual pay figure and we divide it by 49, or 98 if you're in the 50/50 section. So in this example, this person earned £29,280 in the year. So we divide that by 49, and that means they've built up £597.56 worth of pension. Which I know doesn't sound like a lot. When you think about how much you've paid in your pension contributions and how much your employer's paid in, you might be thinking, well, how is that just under £600? It's important to remember that is not a one-off payment. It is not just £597.56 one time. That's how much pension we will pay to you every year from when you retire for the rest of your life. So that could be 5 years, 10 years, 20 years. However long you live, we'll be paying it, so that could end up being quite a considerable sum. So in this example, the person's already been in the scheme for a couple of years. They've already built up a pension of £3,872.14. So we add the amount that they've just earned in the last pension year, so that extra £597.56, and that gives us a total pension there, £4,469.70. We then revalue that whole pension amount, so all the pension that they've accrued, and we adjust it for inflation. So in 2024, the rate of inflation was 6.7%. That was the pension increase amount this year. So you can see the pension then has increased. So to take account of that, so that your pension doesn't get devalued as the rate of inflation increases. So this is just a chart to kind of show how steadily your pension increases. So year on year, how much you've earned, we take that slice, we add it to the pension you've already built up, and then we adjust that whole amount by inflation, and it just grows in a very steady, very reliable way. And it can only go up because there's no investments. So it doesn't matter what happens in the stock markets, there's not going to be suddenly a shock and you're going to lose money. It's going to go up every single year. So you can see here how it builds. Now, I know people will be looking at thinking, hang on, that's like 7 years and it's not even got to £5,000 a year's paid out. The thing about pensions is they are designed to be paid into for a very long time. You have to pay into the state pensions, you have to pay full national insurance contributions for 35 years to get your full state pension. And it's that kind of length of time you need to be thinking about in order to be putting money away, not necessarily just with the LGPS, but across pensions, across your working lifetime. The earlier you start, the longer you are paying in, the more options you will have, the bigger the pension you will have when you come to retire. And that is not to say that if you're joining us a little later in life, or if you only intend to be with us for 5, 6 years, that it's not beneficial. It is massively beneficial. We're still going to pay you a guaranteed pension that is index linked, so it's protected from inflation, and we'll pay it to you for life, and you'll still have tax-free cash options when you retire. It may just be that our pension is just one part of your retirement plans. So what happens with those other pensions? We know that it's very rarely a case of a job for life these days. We do move around, we change job, we go into different pensions. If you've been with the LGPS before, we treat that a little bit differently to if you've had pensions elsewhere. So when you started, your HR team should have sent you an employment history form. No worries if they haven't. You can get one from our website, or you can just send us an email with the details. Basically, just tell us that you were with the LGPS previously and who it was with. So it might be with Essex, but it could be one of the other 86 funds. So, it could be with Cornwall, it could be one of the London boroughs, or Suffolk or Norfolk. And basically, we will contact your other LGPS pension provider, or we'll look at our own records, and then we'll send you a letter and say, okay, if you want to merge those pensions together, this is what will happen to your previous pension. So if it's pension that you've joined since 2014, it will be in the current scheme, which is the Career Average Revalued Earnings or CARE scheme. And that's lovely and straightforward because we literally just add the sums together. Perfectly straightforward. Instead of having two separate pensions, you can just have one. If you were joined us before 2014 and your old pension was in the final salary scheme, there's a few more things you need to think about, but we do send you a letter and it explains everything you need to consider before you make a decision. And then if you want to go ahead, we get those pensions all moved over. But what if your pension wasn't ever in the local government? You've got one somewhere in the private sector or a different public sector pension scheme. You can still look at having those pensions brought over, and it can be very beneficial to do so because there's no admin fees in the LGPS. So, and obviously the defined benefit pension scheme gives you quite a degree of security. So it can be a beneficial thing to do, but you do need to make an informed decision and decide whether it is best for you. You have to make your request to investigate the transfer in of other pensions in the first 12 months of joining or rejoining the pension scheme. So you do need to get a wriggle on that one. Outside of the initial 12 months, there is potential that you could have the pension transferred over, but it does require your employer's consent. So you would ask them whether they're happy for you to do that. If they say yes, fantastic, but they can say no. So always better to do it in the first 12 months because that's just your decision then. The process, when you lay it out, it's actually pretty straightforward. You have to fill in a transfer request form, and that gives us consent to contact your other pension providers and gives them consent to release information to us. They'll send us the transfer information, and what we send to you is a letter saying, if you go ahead with the transfer, that old pension will buy this amount of extra annual pension in our scheme. So it will buy a set amount of pension that becomes local government pension, and we pay it to you every year from when you retire for the rest of your life. And of course, that also has that the cost of living increases applied to it as well. So we'll send you the information and say, okay, this is what will happen to the pension if you transfer it to us. This is what we'll give you. You compare it against what your other pension provider says they'll give you if you leave it with their scheme, and you can decide whether you want to go ahead with the transfer or not. Unfortunately, neither us nor your other pension provider can give you advice on whether it's the best option for you because, funnily enough, we're a little bit biased. So the FCA doesn't like us to do that one. So that's perfectly reasonable. There are financial advisors who specialise in pension transfers. You can always get independent financial advice and they'll look at the whole situation independently and give you impartial advice on what the best course of action is for you. If you decide that you do want to go ahead with the transfer, there's usually some forms that you have to fill in. So you'll complete them and send them to us. And then there's forms that we have to fill in. So we have to prove to the other pension fund that we are properly regulated and licensed and that we can accept the pension transfer. We send them the instruction and they send us the transfer value. And then we update your pension record and send you a letter and confirm how much extra pension that transfer in has bought you. And then it just becomes part of your local government pension, and it will sit there until you're ready to retire and start receiving your pension. But we know it can be a little bit tricky to keep track of pensions. As we say, we do move employers, we change jobs, different pensions with different people, and especially when you're younger, you might not be that good at remembering to keep track and update when you've moved, so you might lose track of some of your pensions. You can find them, however. It's really simple and straightforward. The UK government has its own free pension tracing service. You just go to gov.uk. You can either use the website address that's on screen now, or you can just use their search function, just say trace pension, and it'll take you straight there to it. It's completely free. It'll ask you some questions. So say, is it a workplace pension? Is it a personal pension? If it's a workplace pension, you just say who you worked for, and it'll give you a list separated out by time. So say like, oh, these years their pension was with this company, and these years the pension was with this company. So you can then figure out who has your pension, You'll have their contact details. You reach out to the pension provider, and they usually ask for things like national insurance number, just so they can identify you. They'll find your pension and then update your contact details and send you a statement. All nice and straightforward. It's very easy to do. I recommend you go to the gov.uk website. If you just Google pension tracing, there's a whole bunch of companies pop up first who charge you to do it. You don't need to pay anyone to do it. This is something you can absolutely do yourself for free on the gov.uk website. You can call them if you prefer to do it over the phone rather than online. So there's a free phone number there. They do take a little bit of getting hold of, but that's an option for you if you're more comfortable speaking to a person who can help talk you through the process. So every year we send you an annual benefit statement, and it tells you how much your pension is currently worth and how much we project it will be worth at your state pension age, uh, assuming that you continue contributing to the scheme up until then. You might look at your pension and think, you know what, actually, I'm not sure I'm putting away enough to be able to give me the retirement that I want when I get there. That's perfectly reasonable. There are a couple of other options that you have available to you so that you can buy more pension and save a little bit more for the future. There are two ways. The first one we're going to look at is additional voluntary contributions, or AVCs. Now, with these, instead of the contributions coming over to us here at Essex Pension Fund, the contributions go over to one of our AVC providers, who are Standard Life or Prudential, and they invest your contributions for you. It's still tax efficient because the extra contributions are still coming out of your salary in the same way as your standard pension contributions. So they'll come out and then income tax is deducted afterwards. However, your employer is not required to contribute, and I've misspelt contribute, please ignore that. I don't know how I managed to miss that. I swear I ran a spell check. Yes, your employer is not required to contribute to an AVC, so it's just for yourself. However, the really good things about this is that they're very flexible. You can change how much you want to pay in whenever you like. You can even stop for a little while and then restart when you're ready. So it is quite flexible for you to change, and it works with what's going on in your life at any given time. So the downside is you don't know exactly how much you're going to have in your AVC when you come to retire, because it will depend entirely on how much you've paid in and how well those investments have actually performed. But when you retire, you take your AVC fund at the same time as your LGPS pension. So we give you all of your options. And your options are usually a mix of taking your AVC fund as tax-free cash, or using it to top up your LGPS pension, so making your LGPS pension a bit bigger. Or alternatively, you can just take your AVC fund and take it over to an insurance company and buy an annuity. So it's whatever works for you. So it does give you a few more options. But it's an investment product, so you do have to be comfortable with a certain element of risk, but they do have different types of investments available for you. Now, the other way of paying in extra is with additional pension contributions, or APCs. Now, these ones, the pension contributions do come over to us here at Essex Pension Fund. Again, it's tax efficient, so your employer is not required to contribute. You can ask them. I've never known them to say yes, but technically you can ask. So you should expect to pay this entirely by yourself. You can choose to buy up to £8,344 a year additional annual pension in total. The cost of the extra pension will depend on a number of factors, which include your age and your gender. Now, this trips a lot of people up because they think, hang on a minute, if I'm paying an extra £8,000, why am I not getting £8,000 a year pension back? And it's because of that word there, a year pension. Again, you are buying pension that will be paid to you every year from when you retire for the rest of your life. So if we could just pay off one time £8,000 and then get £8,000 a year back every year from retirement for the rest of your life, I think we'd all do it. Unfortunately, the LGPS is not that generous. So there's an online calculator. It's on the lgpsmember.org website. You can either say, I would like to buy this amount, like £2,000 a year extra annual pension. How much will that cost me? And it will tell you. Or you can say, I'd like to I'd like to pay an extra £100 a month every month for the next 10 years. How much extra pension will that buy me? And it will work that out for you. So it's fairly easy to use. Um, so yes, you can pay a one-off lump sum, which is still tax efficient, but you do have to complete a tax return in order to get the tax relief on it. Or you can choose to pay every month over a set number of full years. And again, that will just come out of your salary in that case. One of the big things you need to be aware of, however, is there are no death benefits included with this extra pension. You are only buying extra pension for yourself. So APCs are really useful if you like to know exactly what you're buying and how much it's going to cost you. It can feel like an expensive way of buying pension because, as I said at the start, traditionally employers bear the bulk of the cost of being in the scheme. When it comes to buying it through APCs, you are paying the full whack yourself, which can make it feel a lot more expensive. But two ways, they do work different ways, and most people find they prefer one way over the other, but there's nothing to stop you from doing both. I'm sure there are some people on the call today who are thinking, yeah, that's great, Jen. Have you not heard there's a cost of living crisis? I'm not putting more into my pension. I'm worried about being able to afford it today. Believe me, I absolutely hear you. It's really difficult to strike that balance between putting money aside for the future and looking after future you and getting through your commitments today. So members can opt out of the scheme at any time, but before you do that, I would always recommend that you look at the 50/50 option. So with the 50/50 option, you pay half the usual amount in contributions, and in turn, you build up half the usual amount of pension. So far, so good, right? That makes sense. What makes a 50/50 option a really good option is that your death in service and your ill health retirement benefits remain at their full value. So what I mean by that is that if you die in service, the death grant, that one-off lump sum, is calculated as 3 times your annual pensionable pay. If you die in service and you're paying into the 50/50 section, the death grant is still calculated as 3 times your annual pensionable pay. It doesn't get halved just because you're paying half contributions. Similarly, with the ill health retirement benefits, whilst the pension that you build up whilst you're paying into the 50/50 scheme will be less because it's half the usual amount, if you're entitled to the enhancements, so you're a tier 1 or tier 2 ill health retirement, your benefits will be enhanced. And that enhancement is again based on your annual pensionable pay. And so it doesn't get halved because you're paying half contributions. So it's really good that you can save money today. It makes being in the pension a lot more affordable. You're still putting money aside for the future. So you're still looking after your future ambitions. You're still giving yourself something to live on when you're ready to finish work. But you're still keeping your safety intact. Those benefits, those protections for your family and your loved ones, they remain there ready for you. So if anything unexpected and tragic happens, you know, you're not leaving yourself high and dry by opting out. You've still got death in service benefits. You've still got ill health retirement benefits available to you. Again, it's really easy to swap in and out of the 50/50 option. All you have to do is fill in an election form, which you can get from our website, essexpensionfund.co.uk. Just go into resources, and then if you use a filter for forms, it'll pop right up. All you have to do is fill it in, then you give it to your payroll department because obviously payroll actually make the deductions. So they know they need to adjust how much they are contributing, you're contributing to the scheme. It is designed to be a short-term option, and your employer is required to re-enroll you back into the main section of the scheme every 3 years. So that's a really good moment for you to stop and think and say, take a time to assess where you are and where you want to be. Are you in a better position? Could you afford to go back into the main scheme? Do you want to put more away for your retirement? Or is it still a little bit difficult at the moment? Are you still ready to, you'd still prefer to just stay in the 50/50 section? If you want to stay in the 50/50 section, it's not a problem. You just have to fill in another election form, hand it back to payroll, and they'll keep you in the 50/50. So lots of options. So if you do want to pay more, you can. If you need to pay less, you absolutely can. So there's always an option for you. And if you're ever confused, pick up the phone, give us a call, and we will talk to you about it. So let's talk about the death benefits which automatically come with your LGPS pension. I know this is a sensitive subject, but it's one of those things where thinking about it now and having conversations about it now just makes things so much easier if something terrible does happen. So the death benefits come in two parts. So I'm going to talk about the pensions first. So there is a surviving partner pension, which is payable to your spouse, to your civil partner, or to your cohabiting partner as long as they meet certain criteria. So it is paid to them from the day after you pass away for the rest of their life. Now, cohabiting partners have to provide evidence that they meet the criteria to be entitled to receive the surviving partner pension. So basically, we will ask to provide things like joint bank account statements, tenancy agreements, utility bills, council tax bills in both your names, something that shows that you have lived together for at least 2 years prior to death. You also have to satisfy that throughout those 2 years that you were free to marry or form a civil partnership. So that you weren't married or in a civil partnership is not the issue. It's saying that the relationship was of the same standard. You simply had chosen not to have formed a civil partnership or to marry. So this does occasionally trip people up where there is a long running divorce. So we know divorce can take years, and it is not at all unusual for estranged spouses to meet other people and form significant relationships with other people. However, until the decree absolute is signed, if something happens to you, the surviving partner pension goes to your legal spouse, even if you are estranged. It cannot go to your partner and you cannot transfer it to them. This is set down in overarching law and it's not something that the LGPS can change. So keep that in mind if you are in the process of divorcing, but you haven't actually signed on the dotted line yet. It is still your legal spouse until that marriage is dissolved or civil partnership is dissolved. So you also must have lived together as if you were a married couple. So we're trying to basically say that your relationship was equivalent to being a spouse or a civil partner. So can't have been living with anyone else for that 2-year period. So the divorce must have been finalised at least 2 years prior to death. And that you must have been financially dependent or interdependent on each other. So that's why we ask for things like copies of joint bank accounts, just to show that you were sharing the cost of living together. So you were splitting bills, contributing to the mortgage or rent, that kind of thing. So it's always worth considering if you have a cohabiting partner, do you actually have, could they get hold of utility bills? Could they get hold of a council tax bill or bank statements or a mortgage statement or something? Because obviously it's be a very stressful moment and a lot of stuff is online. So thinking about it now can help relieve the stress in the future. We also pay children's pensions out to children up until they're age 18 or age 23 if they stay in full-time education or vocational training. So that's always quite straightforward. We just need a copy of the full birth certificate for that one to evidence it. The money does have to go into children's bank accounts, but those can be savings accounts. Now, the other part of the death benefits, as I said, it comes in two parts, is that death grant that we've spoken about a couple of times. So it's a one-off tax-free lump sum. So while it's death in service, it's 3 times your annual pensionable pay. And this one you do have control over. This one you can nominate whomever you'd like to receive it. So you can nominate family members, children, friends. You can actually nominate registered charities if you prefer it to go to a charity. Nominating is fairly easy. You can do it very quickly and easily on Member Online. Or you can just go old school and fill in one of our expression of wish forms, which are available from the resources section of essexpensionfund.co.uk. This is what the form looks like. It's quite straightforward. You can nominate multiple people. You just have to tell us how you'd like it to be split out. So is it 50-50? Is someone getting a little bit more, someone a little less? You do have to sign it by hand. That's for security. Sadly, in case it gets contested by the beneficiaries, we need to be able to show that it was definitely you. So we can't accept electronic signatures on that one. We need to be able to go, it was you that filled in this form. There is a section on there that you can give us explanations. So if you're doing something a little unusual and you'd like to give some background, that can help in cases of it being contested so that we understand your thinking. You can fill in the form, sign it by hand, take a photograph of each side of the form, and then email it back to the fund. That's completely fine. Or, as I said, you can use Member Online instead. If you don't leave a nomination, I should just say, this has come up once or twice before. It's not a problem. We prefer to have your nominated beneficiary. We like to know what you would like to have done with the money. Who do you want that money to go to if anything happens to you? If we don't have a nomination on record, well, it's always down to Essex Pension Fund. We always have ultimate discretion, but we prefer to follow your instructions. But if we don't have one, or it's very much out of date, so you've left it to a spouse that you're no longer married to, or something like that, then Essex Pension Fund will make that decision. We usually follow the rules of intimacy, so it'll be spouse or partner, then children, if there's no children, parents. So standard route. But we prefer that you tell us. It just makes things a lot easier, and then you have that comfort of knowing that who you want to look after are being these people are being looked after. Now, this section, I've had my colleague Carl. He's pre-recorded a little introduction to our member self-service portal, Member Online, and I'm going to play it now. So I'm going to hope else. So again, if you could all give me using the little reaction button, let me know with a thumbs up if you can hear it when I press play. I'm sure I've put the box to say that to include the volume, but you know how these things work sometimes. So I'm just going to press play now. Give me a thumbs up.
Welcome to for Member Online. Member Online is a website you can use to view your LGPS memberships within Essex Pension Fund. Once a login has been created, you can view your pension records with us, update some of your information, and even run your estimates in some cases. If you have registered for an account, you can sign into your account using this button and entering your username, password, and then your security answer. This is the logged in home screen. There are 4 main menus for Member Online. And those are membership details, personal details, change my account, and view my documents. Under membership details, you can view some basic information for each of your pension records with us, such as the name of your last known employer, date you joined the scheme, scheme retirement date, and view your nomination details here. If you have multiple records, you may need to scroll down to view them all, or use the arrow to hide and expand them. There are some additional information that you can view from the buttons on the right-hand side, and you can also update your nominations. By completing the form, like so, and hitting submit. And your updated nomination should display here now. For active and deferred memberships, there is also a button called View My Pension Modeler. Pension Modeler is useful for retirement planning, and it will give you a ballpark estimate of your benefits between age 55 and 75. It will start by showing some key information used for the calculation, such as pay figures and current scheme section. And you can change the age and lump sum percentage to see a change in the figures. This left-hand column of figures gives you the pension and lump sum for the minimum possible age viewed to date. And the middle section gives you the pension and lump sum for the age and the lump sum percentage that you've currently selected. The right-hand side just tells you information about the maximum lump sum for your current selection and how much additionally is being converted from pension to lump sum. Please note that we cannot see any of the figures displayed to you by the modeler, so if you wish to discuss these figures with us via email or over telephone, please hit the print button, which will create a document with the calculation results, and then we'll be able to discuss that with you. Under View My Documents, you can view annual benefit statements, model of calculations, and if you're a pensioner, you can even view P6s and P60s. Just click on the document to open it up, and then you'll be able to view it. You also view any benefit statements that you have generated on here, and you can even compare previous years as well. And you can use these figures to create any queries you might have with us as well. That's all there is to documents, just viewing some of the key documentation that's available on your record. Under Personal Details, you can view and update your personal details such as address. Let's go through updating your address online so you can see what that's like. Just click on the button. Select appropriate response. Let's search for your address. Select the relevant address on the list and submit. It's now updated the address on this record. And you can do something similar with your personal details and the email address that's linked to the account as well, should you wish to do so. You can also update some of your security information here. We're going to do that under Change My Account. You can choose either to update your security question or your password. And you'll need to know your password to be able to update that information. Pick the question from the drop-down list and then enter the answer that you'd like. And just remember that you'll be asked for this every time you try and log in. And you may be asked for it if you try and call us if you've forgotten any of your login details. Lastly, you can send messages directly to us through the message button on screen. You can view the history of any messages you might have, and you can create new messages directly to the fund. Select from the drop-down list from a list of questions, like so, and ask anything pension related to your record. Now appears in the list. If you do get a response from us, this notification bell will turn red and will have a number by it, and if you click on it, it'll just take you straight to this screen. That covers this introductory video from Member Online. If you have any queries or issues regarding the site or your login, please contact us on 0330 138 384 or email pensioninquiries@essex.gov.uk or pensiononlinesupport@essex.gov.uk, and we'll get back to you as soon as we can. Thank you very much.
Okay, so I say we are going through the process of writing out to everybody and offering you the opportunity to register for Member Online. So we do try and hit new people joining as early as possible. So you should get a letter from us pretty early on with an activation code that you will need. If you haven't had one yet, don't worry, you don't need to do anything. We will be writing out to everybody in the next couple of months. So you will have the opportunity very soon. If you have previously registered and you think, hang on a minute, I can't remember my login details for the life of me, I'll put an email address up on the next screen. You can email us and we can recover that information for you. No worries at all. So that's pretty much the end of this introduction to the LGPS. It is still Pension Awareness Week, and there are still some more live shows you can check out on the campaign website. I think there is actually one that goes into a lot of detail about what defined benefit pension schemes are and how they work. So if you're really interested in that, check it out. But as I say, there are loads of sessions available. Go to the website, they're all free. As soon as they finish, they're free, they're available to watch back in your own time. So yes, definitely worth checking out. The videos will be on that site for the rest of the year, so whenever's convenient for you, please do check them out. So, as I said at the start, you don't need to wait for a webinar to reach out to us. If you have burning questions about your pension, we want to hear them. We want to help you, and we want to help you understand your pension so that you can take control of your retirement. If there's anything that you're a bit confused about, maybe I didn't explain too clearly, or you'd like more information on topics, you can email me or epfevents@essex.gov.uk. If you're trying to recover your details for Member Online, or you're having any issues with Member Online, you want to ask questions about how to do things, pension online support at essex.gov.uk. That team dedicated to that particular function, so they'll be able to help you. As I say, we will have the recording of this webinar on our YouTube channel later today, but you can also find videos on how to understand your annual benefit statement and things like that on our YouTube channel. You can either go directly, youtube.com/at Essex Pension Fund, or you can just go to YouTube and just search Essex Pension Fund and our channel will pop right up. All the forms we discussed are available in the resources section of essexpensionfund.co.uk. And if you search using the filter for forms, it'll bring up all the forms onto the one screen, so you'll be able to find them. I also really recommend checking out lgpsmember.org. It's the national LGPS website. It has loads of useful things in there, including bite-sized videos. So they're literally about 90 seconds long, and they explain little things about like how does your pension work, what's the retirement process, things like that. There's loads of them in there. They're really good to watch. Plus, they've got lots of calculators and other pension modelers and things you can play around with to help you better understand your pension. So worth looking at. So that's it from me today. If you've posted a question in the Q&A and it hasn't been answered yet, don't worry, we will email a response to you shortly. And again, if you want to ask us a question and you just didn't want to do it publicly, you just want to ask us privately, that's also absolutely fine. Drop me an email and we will get back to you with a personalised response as soon as possible. So have a lovely rest of your day, and we will hope to see you again in the future with all our future webinars. Thanks very much.